When it comes time for taxes, we all dread it. So it is so great to have an expert by your side, whether you're doing your personal taxes or your business taxes. And that is why I'm excited to introduce you to a great tax expert, Nicole Gilliard. Nicole is the CEO of By the Numbers CPA. She's a certified public accountant with over 35 years of expertise in optimizing business profits. She's known as the Profitista, and she helps businesses build effective structures and accounting systems while providing education on taxes, entrepreneurship, and financial success. Nicole, Miss Profitista, welcome to Liftoff.
Thank you so much. It's great to be here.
Okay, so tax season can be so stressful for so many people. I might be speaking a little from experience here, but a lot of that stress comes from the changes in the tax laws for individuals and for businesses. Tell us what we need to know to manage that.
So that's a great question. So what I see a lot, like you said, is about organization. When it comes to tax time, people are trying to pull all these documents together. So I have three things I want to say. The first thing is to make sure that you're collecting all of your documents before you file. I have a lot of people that as soon as the IRS opens up, like this year it'll be January 27th, they're ready to file. And then they get documents that come in February. So what I say is if you have complex, like you have brokerage accounts or dividends or interest or 1099-Rs for retirement, definitely give yourself time for them to get those documents to you. And that's usually around mid-February. Then file, then you're safer. Number one. Number two is file while you're waiting to file soon enough before April 15th so that if there is a balance due, there's still some tax strategy that can come into play, right? You know what I mean? So it's just about not filing too early, but then again, not waiting till the last minute to file. For business owners, my business owners, a lot of them are not prepared at tax time and they miss out on valuable tax deductions because they're just running the gamut, trying to pull receipts together. And so if you prepare during the year, making sure you're keeping track of those items for your expenses, you'll see more maximum deductions for your business write-offs.
Okay, so your taxes are done and you know how to manage things, and then you get something in the mail or on email after you file with documentation you didn't even remember you needed to include. How's someone supposed to handle that?
So it's the timing of it. So if someone prepares a return and it's before April 15th, they can do a supersede return, which means they just go in, they make the adjustment, and they refile it. If it's after the 15th, then there will be an amendment required.
And then there's always the question of how to best prepare your taxes if you're a small business owner. What's the best strategy for a small business owner? Does the type of structure that you've put your business in make a difference during filing taxes?
Sure. So there are three common type of entities. So there's the LLC, which is the most common. There's the S Corp, and then there's the C Corp. If you are a single member LLC, which means you are the 100% owner alone in that LLC, then you file it on your personal tax return on the Schedule C. Whatever that profit or loss is funnels over to your page one. Okay. If you are an S Corp, it does file its own separate tax return, but the S Corp doesn't pay the tax. The owner does. So that's where that K1 comes into play. It'll have your personal information, your profit or loss portion based off your ownership, and that gets reported on your 1040. The C Corp is a total separate entity, so it will not affect your 1040 at all. It files its own tax return, and of course, any profit gets that 21% flat tax rate.
Oh my gosh, that's so interesting. So for small companies, do you think it's advantageous to change your structure over the years?
So it definitely matters. And that's one of the tax strategies is to make sure you're in the correct business entity. The thread is that if you start making a significant amount of profit in your LLC to the point where it's affecting your personal tax return, you're owing a lot, especially with that self-employment tax, it's time to see if you should transfer to an S Corp. Now, I don't want people to automatically assume that they should just go to an S Corp versus a C Corp because it really depends on how much income you are bringing in at that point. Because if you think about it, even if you do an S Corp, where you do have the protection from self-employment taxes, that's the number one savings there. However, if your profit is still 40,000, 50,000, you're still putting that on your personal tax return, right? Bumping up your tax bracket. So as a corporation, there's only that 21% tax bracket. So you have to see which entity is better, but definitely converting to another entity is a tax strategy to save money.
Those are such great pieces of advice. And there's something in there everyone can take advantage of. Thanks.
Thank you so much for having me.
We're taking a short break, but stay tuned for what's next.